Shall I open my video? Camera on. Shall I turn it on?
Sir, you are not audible clearly.
Hello?
Yes, sir.
Can I can I turn on my video camera?
Yes, sir. You can share.
Okay, now you can start.
Yes, sir. 1 second, sir. On behalf of Professional Development Committee of Western India Regional Council, the Institute of Cost Accountants of India, I welcome all of you for the today's webinar series on intricacies of cost audit and cost records rules on different sectors. Our today's session is on steel sector. Our today's speaker is CMA Chasati Leela Srinivas sir. He is presently working as a Deputy General Manager, Finance and Accounts in Rashtriya Ispat Nigam Limited, Visakhapatnam Steel Plant, Andhra Pradesh. He had his MBA from Dr. Brau, Hyderabad. He has rich experience of about 33 years in public sector steel manufacturing company in the areas of accounting and costing. He dealt many sections in finance and accounts department like store accounts, branch accounts, operation bill processing, corporate accounts, and in costing section. He is a part of many committees of the company for designing the procedure orders in various areas of accounting. He was a bridge for system migration from CBOL to Oracle and from Oracle to ERP SAP. He was a Jawaharlal Nehru. He awarded as a Jawaharlal Nehru Award winner for the year 2006-7, an internal award for his continuous outstanding contributions in the company, developing logics for various reports for cost accounting records and reports for steel manufacturing are his favorite area of work. He is presently looking after costing section in RINL and instrumental in RINL, being placed at first position under Mega PSS category for efficient cost management for two consecutive years, 17th and 18th award by ICMA. He is active in serving the CMA profession and currently chairman of a Ukunaram chapter of cost accountants. I welcome sir, and now I request sir to kindly start the session, sir, please.
Thank you, Priyanka.
Thank you, sir.
Uh, are you seeing my desktop, my screen?
No, sir.
No. Now,
Yes, sir.
how you are able to see?
No, sir. Your
Now,
presentation not visible.
now it's not visible.
1 second, sir. Participants all are visible. Sir, presentation is visible.
No, it's not visible.
Sir, it's not visible, sir.
Now,
No, sir, still not visible, sir.
it's not visible. Hello? It is why it's not coming.
Screen change.
Now we can see.
Recording has started. New screen change.
Sir, please start now.
So can I operate this? Okay. Good evening, my dear cost and management accountants. Are you audible?
Yes, yes.
Really, it is my privilege to be in front of you as speaker for today's webinar. First of all, I would like to thank respected CMA Chaitanya Mohirir, Chairman of WIRC, and CMA Arindam Goswami, Vice Chairman and Chairman Professional Development Committee of WIRC, and CMA Mihir Vyas, Honorary Secretary WIRC, and CMA Nanti Shah, Treasurer WIRC, for giving me this opportunity to be a speaker for session 4 steel sector in the webinar series on intricacies of cost audit and cost record rules on different sectors. Dear CMS, you are all experts in your field. Definitely you all know better than me. For today's presentation, please let us be on an agreement. You please ask your queries in chat box as and when it comes to your mind. I would love to reply those instantly. In case if I don't give you a convincing reply, please send me the query to my mail ID. I will reply personally after this webinar is completed. Your queries will help me enrich my knowledge also. So let us utilize the initiative of the present committee of WIRC and deep dive into the knowledge of cost audit and cost record rules of steel sector. My plan of presentation is like this. If we only concentrate on companies' cost records and audit rules of an industry, these rules are same for all the industries. Only thing is table A and table B core sectors and non-core sectors, regulated sectors and non-regulated sectors. Separately it is there. But almost all records and audit rules are same for each industry. But the intention of our web series, webinar series is to understand different intricacies not only in the record maintenance and audit rules, and the intricacies in the manufacturing process or service sector, and how costing is being done in those sectors. If we understand those things only, we can better report better maintain our cost records, and better we can give our data to the auditor for doing audit. So that is why my plan of presentation is like this. Initially, in the first part, we will do iron and steel manufacturing process, how it is happening in the manufacturing companies. Before going to this one, first let us have let us know something about steel industry. Establishing a steel manufacturing unit requires a lot of capital in the form of fund and land. It is a capital-intense industry. For establishing 1 million ton capacity, approximately 3,000 crores rupees in the form of fund and 1,000 acres of land is required. World steel production in 2022 is 1885.4 million tons. China is the largest steel producer with 1,018 million tons, followed by India with 125 million tons, Japan 89.2 million tons, and US 80.5 million tons. Per capita finished steel consumption in 2022 was 221.8 kg for the world as a whole, and 645.8 kg for China alone. The same for India was 86.7 kg in 2022-23. Price regulation of iron and steel was abolished on 16/1/1992. Since then, domestic steel prices are determined by the interplay of market forces. Domestic steel prices are influenced by trends in raw material prices as well as demand and supply conditions in the market, international price trends, among others. In 2021-22, the steep price of input raw material, coking coal raw materials have increased from $1,100 to $600. So during that period, many of the steel companies, what they did, they could not manage their working capitals. So some companies have shut down their operations for capital repairs during that period, and some have throttled the production to come out of the working capital pressure. As a facilitator, the government of India monitors the steel market conditions and adopts fiscal and other policy measures based on its assessment. Government of India has notified National Steel Policy in 2017, which envisages development of technologically advanced and global competitive steel industry that provides environment for attaining self-sufficiency in steel production by providing policy support and guidance to steel producers. National Steel Policy 2017 also envisages by 2030-31, India should achieve and enhance its crude steel production by 300 million tons, and per capita consumption is 158 kgs. Presently, it is in India 86.7 kgs per capita consumption is there. That they want by 2030-31 158 kgs, and present capacity of India is 165 million tons. Against that 125 million tons is produced. So basic raw material required for steel manufacturing is coking coal. 1 ton of coking coal is required for 1 ton of steel, and the second raw material is iron ore. Iron ore is technical name is hematite, which has 64% of Fe content. This 1.6 tons to 1.7 tons required for making 1 ton of steel. And the variable cost of steel is around 74%, and the balance 26% is fixed cost. Out of the 74% variable cost, coking coal itself is 40%, and iron ore is 18%. That means 58% is represented by only two materials in the total steel cost. And fluxes and other materials like limestone, dolomite, ferroalloys, manganese ore, aluminum, petrocoke, etc. is contributes to 5% of the variable cost. And the total operating variable cost like stores and space and refractories, water, power, all these things together, it is roughly works out to 10%. So 58%, the line share is from the coking coal and iron ore. If these two prices are abnormally increased or decreased, the steel price in the market will be automatically increased. So now let us go to the first process, coke making. So the coking coal means it is a bituminous coal. It has to be converted to coke. It conversion of bituminous coal. It will be converted to coke by process of carbonization, which consists of heating the coal over 1100 degrees centigrade to around 1500 degrees centigrade. It has to be heated in a closed chamber in the absence of air in vertical coke oven batteries. And the coke is a hard and porous mass. While coke, it will be converted first initially to the plastic mode, because the air, it will be heated in the absence of air. So then it will become like this. Approximately in a coke oven battery, coke is to be heated for pushing one pushing. It requires 15 to 17 hours required for pushing. And while doing this, we, in addition to coke, we get raw gas. It is a toxic. So many toxic gases will be there in the raw gas, and from the raw gas, crude benzene, crude tar, ammonia are the byproducts. Coke is sorted to BF coke, nut coke, coke bridge, and coke dust and coke sludge based on the size of the coke. And along with that, the steam is also being extracted in the coke dry cooling plant. From the coke will be in a very hot condition. From there, some steam will come. That is a 40 atmospheric number. That steam will be collected and is used for electricity generation in back pressure turbine systems. So very good quality coke should have minimum 85, more than 85% of fixed carbon and less than 10% ash and 2% volatile matter and 0.6 to 1.5 sulfur and 0.04% phosphorus. Roughly 1.7 to 1.8 tons of coal is required for making 1 ton of coke. This coal also, it will be, there are 3 types of coals will be used in making the coke: hard coking coal and soft coking coal. Hard coking coal is hard coking coal and soft coking coal. Both are imported only in India. We import these coals from Australia and US, and now recently Russia is also importing. We are importing from Russia, and Indonesia also we are importing, and Mozambique. From Mozambique also we are importing these 2 coals. In India, these coking coals are not available. They are not suitable for making coke. So that is why in India, whatever coal is available, it is only medium coking coal. This is 5% only. We can use this. So remaining coal, whatever is available in India, it is only for boiler coal only. It is available. That is used for power generation. And coke acts as fuel to provide heat for requirement of endothermic chemical reactions and making metal. Metal means iron ore, the second raw material, and slag. Some slag also will be there. This coke acts as a fuel to burn the iron ore and slag. Next. In the process of coke making, this is because the raw gas is being released in the process of coking, in the process of production of coke. This gas, it cannot be flared in the atmosphere because this is Madam, can you show it on slideshow? Yeah. So from this raw gas, previous slide, please. Yeah. From the raw gas, these toxic elements are to be removed. The toxic elements are present in the raw CO gases: hydrogen sulfate and hydrogen cyanide and ammonia and benzene. So from the raw gas, they remove crude tar and ammonia and crude benzene. These three will be removed, and so that the clean CO gas will be derived, and this clean CO gas is being used as a fuel in the entire process of the steel making. So again, from the crude tar, the pitch will be made, and pitch will be again reprocessed in the tar distillation plants, and pitch crushed mixture and the medium hard pitch and BF pitch. These are all saleable products, byproducts. And from the naphthalene fraction, this HP naphthalene, high pressure naphthalene will be there, high pressure naphthalene and DNI. These are also saleable products. And from there, coal tar wash oil and phenol fractions are also made. Please, previous slide. And from the crude benzene, it is benzene will be there, and toluene will get, and less oil will get, and solvent. And from ammonia, if we add sulfuric acid, the ammonia sulfate will be manufactured. So next slide. The next process is sinter making. Sinter making is before sinter, base mix is made. Base mix is made by using iron ore fines, iron ore slime, and sinter returns, metallurgical waste, and limestone, dolomite, and coke bridge. So the iron ore, these mix of iron ores will be fired. The entire steel making is only burning and again cooling. Previous slide. Burning and again cooling, heating and cooling. Next slide. Yeah. So from the iron ore and the flux we make sinter in the sinter plant. This iron ore is Fe2O3, contains 70% of ferrous and 30% oxygen. This iron ore starts melting at 1100 to 1150 degrees centigrade. Next slide. This is the blast furnace process operation overview. In the blast furnace, what happens? This coke and the sinter and limestone and fluxes and all. The iron ore, coke, and limestone, it will be called as charge, is conveyed from top to the furnace, top of the furnace to top of the furnace. That will be conveyed, and the charge is stored in wells until it is until the timing is right for charge, and it will be dropped into the furnace. Hot air is blown from the tubes. These are the tubes. From this air blast, and the hot air will be blown out. Once it is blown out, the coke burns to increase the temperature of the furnace to 1700. From top to bottom, it will be from 200 degrees, 500 degrees, 1000 degrees, like that. When it comes down, it will be roughly around 1700 to 2000 degrees centigrade. So the limestone attracts the impurities in the iron ore and forms slag and becomes fully liquid in 1300 to 1400 degrees centigrade. This slag is lighter than molten iron. So iron will be in the bottom, and on the top side slag will be there. So as the furnace fills, the molten iron is tapped off and it is taken out from this, and slag is also taken from the top at regular intervals. And this hot metal, it is called hot metal. That hot metal is poured into buckets called pigs. That is called the pig iron, which is used for cast iron. Next slide. Yeah, this is the process flow. We have seen up to this blast furnace process. Here the raw materials are the inputs are coke, sinter, sandstone, and limestone. From here the slag is taken out and the hot metal is taken out, and some portion of it is used as it is converted to pig iron, and major portion is taken to steel melting shop. Steel melting shop is LD converters will be there. This hot metal will be poured in the ladles, and ladle means one ladle consists of around 150 tons of metal. And if it is a topper ladle, it will be there will be 300 tons can have the carrying capacity. And from there it will be taken to SMS LD converter, and there the liquid hot metal is poured in this, and oxygen is enriched, and ferroalloys, aluminum, and will be added here. What is ferroalloys will do is the manganese portion, it increases the harder ability and strength and toughness and hot workability of the steel. And chrome increases the hardability and strength and corrosion resistance. And silicon is a ferrite handling and deoxidization, and slag, it will reduce the slag portion. And aluminum is also deoxidizing element in the steel. So all these metals, the grade of a steel is decided based on the ferroalloys and aluminum and other ladle additions consumed in this process. So from there, the liquid steel will be produced, and that again that converter also from the converter through steel ladles, the hot liquid steel will be collected and taken to casters. Casters will be like this, and from top nozzles and all tundish nozzles, it will be slowly the hot liquid steel will be poured, and they will make it as casters. Then that is called the crude steel. This crude steel in a typical steel plant, we have one caster for 320 to 50 sizes. One bloom will be made, and another bloom will be made 250 into 250. In another mill, 200 into 200 and 150 into 150, and rounds 430 rounds and 380 rounds are manufactured in the casters. So these can be, if market is if better realizations are there, some semis also will be used for sale. And this crude steel, again it will be the mills will be there, bar mill, wire mill, structural mills like that. And this crude steel again it will be taken to furnace and reheated, and the bar mill products will be there like rounds, rebars, and channels, angles like that. And the wire rod mill, it is simple 6 mm rounds, 5 mm rounds like that it will be there. And structurals like angles, channels, beams, all those things will be made in this. Here you can see this is the rebars, this is the wire rod, and these are the channels, and these are the crude steel billets. From this, again re-rollers, they will take it and they will manufacture these screws, nuts, bolts, and in construction of houses also these rebars and all will be used for making nails and all also. These steel rounds and all will be used. Next slide, please. Yeah. In addition to this is the main process of the steel making. In addition to this, because steel plant requires captive power generations, thermal power plant, because the heavy machinery is to be run on the power only, because heating and cooling is the only operation in the steel. So for power generation, thermal power plants is there, which will be, the power will be generated through boiler core. Power is generated from boiler core and gas based power plant. See, in the blast furnace, during that process, some BF gas is also generated. Through the BF gas, it will be directly going to one captive power plant, gas-based power plant. From there also power is generated. And we have seen in the back pressure turbine system. So slide mode please. In the back pressure turbine system also, that waste gas is collected and power is generated. And the gas expansion turbine system, this is in the blast furnace, and one top recovery turbines in the blast furnace. From these things also, power will be generated. The power generated through back pressure and jets and TRT will be cheaper than the boiler coil power and BF gas based. And steel making requires because it requires continuous supply of power as heavy equipment has to run without hampering the production. In case of internal failures, external power is also used by purchasing from the electricity boards. So steel requires not only the raw material, and the power is also a major role in steel making. And the air separation plant, because oxygen is for the chemical oxidization has to be done in the blast furnace, oxygen is very much required. So that is why air separation plants are also will be in the manufacturing plants. Oxygen, nitrogen, and argon gas are required for usage in coke oven gas, sinter plant, blast furnace, and for enrichment. And compressed air is also required for operation and service purposes. And chilled water for cooling purposes, and soft water and dim water for usage in the steam generation. So these are all the utilities part. Next slide. Yeah, these are the services. There are see, it's a very big as I told you earlier. It's a capital intense and a lot of processes are required, and internally they have to deal all the services and maintenances have to be done internally. So for that, they have to maintain these production services and maintenance service departments. Like for production department services, energy management, environmental management, and production planning and monitoring, quality assurance, and creativity. For each ton it is produced, for each heat, the quality assurance will test it, and whether it is in conformity with the standards or not, they have to certify. So that department is plays a crucial role in steel making. And rolls and roll shops. This steel in the mills, it has to roll from one machine to another machine, and suppose a billet is kept it on in a billet mill, that has to roll, and the size of that billet will become either in the form of round or rebar. These rolls plays an important role. And like that, raw material management, what materials has to be procured and how it is to be stacked, all those things will be done by raw material management. And raw material handling, because a lot of materials which comes from the port, they have to taken on to the conveyors, and they will directly be fed into the coke ovens as well as in the blast furnace. So for that, this conveyor system and all will be there. That raw material handling plant, that department will see. And structural engineering and scrap, a lot of scrap also will be generated. And traffic department for rail movement and all, traffic department will have to be looked after. And water management also is a major role, because everywhere cooling has to be done. So water has to be used in every process for cooling purposes. So in addition to that, the maintenance services, all machinery has to be maintained by these service departments like air conditioners and civil engineering and structural engineering, central maintenance, central mechanical maintenance, capital repairs, calcine and refractory, CRMP uniform, and distribution network. All the power generation will be collected, and at one source it will be collected, including purchased power, and the average power, the total power, it will be distributed to the entire plant. Consumption will be from one point. and electrical repair shop will be there, and engineering services. All these, and IT also plays an important role for so many operations are done. PLCs, programmable logic controls, that IT and ERP departments will look after, and instrumentation and blueprints and so in addition to these maintenance services and production services, lot of other general administrative services are also there, like finance department, like purchase department, like personal department, like in every steel plant, because it requires a lot of it occupies a large area, they will be away from the main cities. So they need a separate township, and they need separate hospital for their employees, and if any accidents happens, immediately medical care has to be given. So all these additional services will also comes under general administrative services. Next process. Now, steel casting in ERP SAP. I do not know how the other steel plants are doing, but when we inquired with many of the steel plants, they have also implemented ERP SAP, but they have reported that their costing is done out of the ERP system. They take data from the ERP, and they'll extract data in Excel, and they'll compute the cost of production of different materials, and that cost again they will be assigning it to the inventory, and the cost or NRE, whichever is less, that accounting entries will be posted outside the system. That means from ERP SAP, they are not getting the cost, they are not determining the cost of production of each product. But in our company, we have successfully implemented ERP. Incidentally, I was the member of ERP.
You are not audible, sir. Hello, sir. Hello, sir. Hello, sir.
Hello.
Yes, sir.
Now I am audible.
Yes, sir.
Okay. Then slideshow mode में please go to slideshow mode now. Yeah. So I think we have some technical problem. This when it comes to ERP implementation, we have implemented ERP successfully in our company, and when we discussed with other players, they have reported that they have implemented ERP and they are doing costing in. They are feeding all the data in the ERP system, but their costing is not done in the ERP. They are taking data from the ERP and they are doing cost of production for each material in their own fashion, like in Excel they are doing. But in our case, we have implemented successfully, and we are taking cost of production for each material or bringing it to their present condition and location. Suppose if
Sir, you are not audible, sir.
Hello, am I audible now?
Yes, sir.
Okay, something is happening, some network issue. Okay, can you please go to slideshow mode? Okay. Okay, then so let us have some knowledge about ERP costing. ERP integrates or integrated set of IT systems so that employees can make enterprise-wide decisions by viewing enterprise-wide information on all business operations. If a data is entered at one point of time, entire enterprise will be viewing that data in the same manner without doing any tampering of the data, and there is no need of duplication of data entry. That is the main crux of ERP. The key word is enterprise. An enterprise, entire enterprise can see the same data in same way. Then ERP systems focus on all processes, departments, and operations for the entire enterprise. Next. Okay. ERP system correlates data generating an enterprise-wide view that is consistent and real-time for the entire enterprise. It is involved in sourcing, producing, and delivering a company's product, right from procurement of raw material, right from taking purchase requisition and placing purchase order and goods receipt and invoice receipt and production using that procurements in the production and producing the goods which they are manufacturing and delivering it to the customers. So from procurement to pay, all procurements will be till payment will be tracked and all production will be tracked till they are delivered to customers. So the major components on focus on module, they will be calling as modules like accounting, finance, and controlling (FICO) module, and production is a production planning module, and materials management (MM) module, and HR module, and sales and distribution will be dealt by. It will be distributed among these modules. All transactions will be distributed among these components. And extended components typically focus on the and require interactions with the customers, suppliers, and business. These are the above modules, whatever we in the previous point we have discussed. They are the basic components. In addition to that, customer relations and supplier relations, SRM, CRM, and business partner, business intelligence, BI and IVL, all those are extended components. And typically, internet operations are enabled. You see, by sitting in Visakhapatnam or by sitting in Delhi, I can do this transaction anywhere from my home. Also, I can do this transaction. These are internet operated transactions. And now the higher version. Now we are in ECC, and now we are moving to HANA. It's an advanced version that is based on the cloud basis transactions will be there in the ERP. Next. Yes. So for SAP, there are some configurations and there are some master records previous. Yeah. So the basic thing is company code. Company code means a company which has to report its transactions as a legal entity. Whatever it has to report at that level, company code will be created. And controlling area, it is for the costing purpose. Operating concern means if a company has two plants and they want to see transactions each plant wise, then operating concern will be there. Plant means evaluation of the material from one place to another place if it is changing. Suppose I am manufacturing material at Visakhapatnam and I am transporting material at some Mumbai. I am transporting that material. So my valuation at Visakhapatnam is different than the valuation at Mumbai. So these Mumbai office and my Visakhapatnam office will be created as two plants they will be configured as two plants. And sales office, all sales offices whatever are there in across the country, they have to, because sales office wise profitability, if you want to know, you have to create sales office in the you have to create in the configuration. And house banks, whatever banks you are dealing with, company deals with, that they have to create in the system as house banks. And depreciation keys based on the life of an asset. And OBYC settings are transaction keys. That means suppose BSX means
Sir, you are not audible, sir.
yeah. Are you hearing me?
Yes, sir.
Okay. Then I'll continue on my mobile then. Hello? Hello, next.
Yes, sir.
You take this slide is over. You can take next slide. Yeah. Are you hearing me?
Yes, sir.
Okay. Then transaction codes will be used in SAP to record a transaction. It is a code through which system allows to perform a specific activity on presetting the system. Then, for example, F-02, it is a general ledger, general ledger account posting. It is for any journal entry. If you want to pass, this T code can be used, and debit and credit keys will be there. Based on that, these accounting entries will be passed. And ME23N, for example, these are all the example T codes. This is for creation of a purchase order on a vendor. And MIGO, whenever material is received from a vendor, this MIGO transaction will happen. With that, the accounting entry will be passed automatically, debiting the inventory and crediting the GRIR clearing account. And for Myro, it is incoming invoice verification. When we do invoice verification, the accounting entry will be passed like GRIR clearing accounting entry debit will be there, and the credit will be to vendor liability account. And that vendor liability again it is to be paid. Vendor account will be debited and bank account will be credited. And FB60 is the vendor invoice, direct invoice without PO. And in HANA, this is in ECC. If it is HANA, it is these T codes will be icons. With the symbol, some symbols will be there, like on our PC it will come, no, some folder names and all. And with if you click on the folders, these transactions will be background, they will be mapped. So next slide, please. Yeah, whenever a user performs a transaction code, if an accounting entry is generated, the relevant FICO records are updated based on accounting document and controlling document. And simultaneously, it has the accounting entry as well as controlling means costing, for costing purpose, this document will be posted. MIGO, it's already discussed, use it for goods receipt. Accounting entry is inventory debit and GRIR. GRIR means nothing but goods receipt and invoice receipt account credit. And Myro, this is invoice verification. Use it for incoming invoice. Accounting entry is GRIR account debit and vendor account credit. Next. Then controlling deals with, controlling is the main area where I am the core team member, and we have successfully implemented the controlling portion. So far we have not seen any steel plant in whomever we have discussed, some 4 or 5 steel plants, even in public sector plants. They have reported that their controlling module was not properly implemented, something like that. But here we have successfully implemented. And this controlling deals with management accounting, which is an internal and integrated accounting of an organization. So all the costing process will be happening in the controlling. Then internal accounting consists of cost element. Cost element is nothing but GL. If a GL is a part of cost of the production, then that GL will be created as a cost element in controlling module. And cost center, you all know that where costs are collected and where costs are incurred for doing particular activity. And the product costing is, hello? Then some disturbance is coming. Hello. Then product costing is to determine the cost of production of a product. And profitability analysis is nothing but cost minus sales realizations, how the margins will come, like that it will be known in the profitability analysis. And product costing includes accounting of costs against production orders. We will discuss production order in the next slides, what it is. Materials related cost elements are posted to production orders, and cost and other cost elements are posted to cost centers. Cost centers are transferred to cost center. Costs are transferred to cost objects like cost centers, production orders, internal orders, and WBS element. WBS elements means work breakdown structure based on some statistical key figures. Because whenever an accounting entry is passed, so there will be a debit GL and credit GL. If that debit GL is a cost element or credit GL is a cost element, then invariably it will ask where this cost is incurred. So that cost center has to be fed into the transaction. And these costs are cost centers are transferred to cost objects like cost centers, production orders, and internal orders, and WBS elements. If a WBS element means work breakdown structure, that can be capitalized also. And AUC, asset under construction. Based on statistical key figure means statistical key figure is nothing but a ratio. Suppose a service department is there, which serves to the some 4-5 production units. The ratio of that service cost center has to be distributed among the production cost centers. So that ratio is called statistical key figure. Next. Yeah. Materials. Material means raw materials, stores and spares, semi-finished goods, and finished goods. Raw materials consumed for producing semi-finished goods and finished goods are directly charged to production orders through bill of materials. All raw material issues and utilities against each production order are part of bill of materials. So production orders contain bill of materials and routing. Routing means cost center costs. So conversion costs are allocated to production orders through routing of each production order. Inputs for routing are from activities of the cost centers. What happens now? First, initially transactions will be recorded in the cost center through cost elements. Whenever salaries are paid, or repair and maintenance expenditure is incurred, or some service, some water is purchased, or some stores and spares are issued. All these costs are collected at the cost centers. And based on the bill of material, for each material, one production order will be created in a month. So that to that production order, whenever production happens in the production department, whatever they consume again for producing a particular material, particular SFG or finished good, the raw materials will be issued against that production order under some movement type. So for example, 261, 262, like that movements will be there. With that, production order will be debited. And simultaneously, costs incurred, suppose salaries paid and repair and maintenance bills are paid, stores issued, they will be collected at the cost centers. So that is why we said production orders contain bill of materials and conversion costs are collected in the cost centers. Next. Okay. The production order means production order contains sequence of operations, and each operation describes how to carry out a work step. The production order contains all the information required for producing targeted planned quantity of material. How much, what is the input, one batch lot will be there. For each lot, how much is the input, how much is the output. So that details will be maintained in the production order. Production order determines the following: which materials are to be used. So for 100 tons of hot metal, how much coke is charged? How much coke is charged coke is to be used? How much sage door is used? How much sinter is used? All those things will be maintained in the production order. And which work centers or cost centers are attached to the production. Suppose blast furnace, if hot metal is produced, hot metal cost center will be attached. If sinter is produced, sinter cost center will be attached. Base mix is produced, base mix cost center will be attached. And they will be background in PP production planning, they will be called as work centers. Work centers and cost centers will be defined, cost centers are attached in production planning module. Then the dates when these operations are carried out, and each transaction will have a date. And what materials are to be ready, that also we will know from these operations. If material is not there, you cannot complete a production. So that is why that stock details also will be known. So whenever you are posting a transaction in to the production order, it will say the stock is not there for this product, for this input. So then you have to see where from you have to get those materials, and which materials and activities are procured externally, and the receivers to which actual cost can be settled. So after posting all the entries, input and output, suppose the usage differences will be there in the production order. That usage difference again, it will be settled against the actual material, where that if that production order is for hot metal, the variance will be settled to that hot metal. If it is a sinter making production order, the variance will be settled to sinter production. Next. So this is already explained, bill of material and routing. And cost of all bill of materials are posted to production orders on confirmation of their consumption against an output through material management in SAP. So material management model, whenever the shop floor people, whenever they consume material against a production order, that will be posted in Automatically background, based on the transaction keys, the accounting entry will be posted. Here, accounting entries are not only posted in finance department, even the works people, whenever that transaction happens, the background transactions are the responsibility of the works people. And routing costs, all activity costs like salaries and wages, stores and spares, repair and maintenance, water consumption, all those things are posted to cost center, are posted to production orders. Initially, they will be posted at standard cost. And after the month end, it will be posted standard cost for the actual quantity confirmed. And planned production orders are also for the following purpose: to determine the planned costs for a material being manufactured based on the planned lot size of the order, to calculate planning variances and use them to decide what production version to use, and to be able to determine production order variances. Next. Yeah, this is when the production means GR, goods received, or consumption GI, and activity is confirmed against a production order. The same are valued at standard price initially, and necessary entries are posted in FI module to inventorize the production as well as to credit the activity cost center and debit to the production order. Material is directly posted to production order, and the activity cost is posted from cost center to production order. That is why cost center, all expenditures are debited to cost center, and activity against that will be credited to cost center and debited to production order. And periodically, this production order status will be changed to TECO, means technically completed, and DLV, delivery completed. That one flag will be there to enable to determine the actual routing cost for the production order. That means for this month, this production order is completed. That indication will be there through TECO and delivery completion mark. And adjustment on account of change in the cost from standard price to actual price are to be carried out in FI for the respective accounts in the inventory. Suppose a variance is there in the production order, so that they have to be settled to the finished good and as well as to if stock is there, that variance will be debited to inventory. And if stock is not there, that it means that entire thing is consumed, then it will be going to consumption. The COGM and COGS means cost of goods manufactured and cost of goods sold. And subsequent price difference of input materials are as per BOM are adjusted to SFG and FG during material ledger process. And material ledger we will come in the next slides, it is there. So that actual costs are determined for the particular period. Next slide. Yeah. Then what is actual activity cost? Every period end on completion of FI entries, for example, for expenses like entries for stores consumptions, SES for contracts, repair and maintenance contracts, and depreciation accounting, cost center costs are reposted and distributed wherever necessary. So every period end activities will be, these are all the period end activities. and assessment of iterative cycles are run for transferring service cost center cost to production cost centers, and in turn production cost center cost to activity cost centers. Statistical key figures are the base for distribution and assessments. What happens? These service cost centers services are initially distributed to production cost centers. Inter alia, the services will be used by the other service cost centers also. So these are all iterative processes. So for first service cost centers, internally they will be settled. Suppose water is consumed in power and power is consumed in water. So this iterative process will be happening in the assessments, and the ultimately final what is the service cost, it will be determined. That service cost again it will be posted to on certain ratios or for actual usage base. They will be called as statistical key figures. Statistical key figures are nothing but a ratio in which ratio the costs are to be assigned or distributed to the other production cost centers. Then costs so assessed in cost centers. So activity cost centers are now with the all these expenditure, stores and spares, salaries and depreciation. So these costs are divided with the actual activity quantity. That, for example, in hot metal activity cost center, suppose 3 lakh tons of hot metal is produced. So there is a suppose 3 lakh rupees is collected in the cost center as activity cost. Then it will be divided with 3 lakh. So 1 rupee will be the activity cost per ton of hot metal. So that, see, initially production order is debited with plan rate. So that plan rate will be revised to actual activity rate. So then the production orders are revalued with the actual activity rates. Next. Yeah. So after the actual activity costs are posted to production orders, the production order variances, that means input versus
Sir, not audible.
Liquid.
Sir, not audible. Sir, you are not audible, sir. Steel.
Now
audible, sir. Now audible.
now audible now. Okay.
Yes. Yes, sir.
Now, okay. Then the material ledger is one of the classic thing in SAP controlling model. Why we have chosen, why so many companies, they have not gone for implementation of material ledger, because a lot of period and activities have to be carried out regularly. So, but we have gone to this material ledger implementation. And company want to, when company want to evaluate inventories at periodic average cost. See, our cost, our accounting policy, any company's accounting policy will be periodic cost, periodic average cost. Suppose if you are declaring your results for an year, then the average cost of the entire year will be your cost of production, and your inventory also it should show at that cost. If you are showing, if you are reporting for 6 months, then the period will be the 6 months. If you are quarterly, if you are reporting, then quarter will be the period here. So my company if a company want to evaluate inventories at periodic average cost, then company has a history of huge price differences and escalations paid subsequent to receipt and consumption. Because in steel manufacturing, as we discussed earlier, our main thing was price differences of huge materials. 40-58% is only coal and iron ore. So a lot of price differences will be there on this. So those price differences, if we want to settle, this is the best thing, because those price differences will be rolled up to the inventories. Then current prices for current consumptions will change due to these fluctuations. And if company want to amortize these purchase and production variances over life of the inventories, then company and entire this process of price differences rolling up to the inventory and consumption, company wants to automate this process. So that automation is there in the material ledger. Next process. Next slide, madam. Then multiple valuation. Combine the benefits of standard price control. Initially, in the SAP, the materials will be posted at standard price. Then preliminary, that as in the preliminary valuation clause, the accounting entries will be posted. Then the price difference will be there. Then the average actual price will be there. All these things will be known in the one in one shot. So enable accurate periodic valuations and settle proportionate price variances to period and inventories, and roll up from single level to right from my raw material to my finished steel. The price variances have to be rolled up as per the sequence. Next. Yeah, see, this is the product costing, CO cost center accounting, and manufacturing cost center 1, 2, and cost center 3. Those costs are rolled up to production cost center, and from there through activity it has gone to routing, and the bill of material, raw materials are bill of material, and those two are sent to production order. So then the finished goods inventory is accounted in this. The next. This is only a pictorial representation of the production cost of steel. See how raw materials are coming, and they have been done in cost center activities. And power is also, again click, madam. One more click, madam. Hello. Yeah. Here that cotton is the cost accountant. He has to control these activities. That is what controlling means. Next slide. Yeah, this is the material ledger. See the green ticks what you are seeing there, period status. Green means that process for 1221. 1221 means 2021-22. 12th period. That is not 12th December. It is a period. It is not month. And the material is hot metal. If you see, beginning inventory quantity is there, and preliminary valuation at standard price is there. The price difference, whatever receipt price differences are there, and the actual value and actual price. Ultimately, your consumption and period end inventories will be valued. So this is very accurate calculation of products in SAP, and with these costs are only we are taking to even into the balance sheet automatically. We need not take automatically, that will be in the system. So anytime we can verify what is the input, how that costs have been arrived. This is a beautiful system, SAP costing. I do not know how many companies are using, but it's a very good experience of working on SAP costing, controlling model, and material ledger. Next one. Yeah. Companies, see, these audit rules and all are same for all the companies. There are no specific things in the process of maintenance of records and appointment of auditor. We know that previously in 2011-12, one order was there, 35/2021, issued by MCA under Section 233B. That is based on net worth and turnover. And then, as per 469 of the Companies Act and Section 148, Central Government issued Cost Accounting Record Rules 2014 on 30th/6/2014 and 30th/12/2014 in supersession of earlier rules. The rules consist of short title and commencement, definitions, application of cost records, applicability of cost audit, and maintenance of records and cost audit. Rule number 6 is cost audit. Next slide. This actually last week when Aptesar has nicely explained. These rules are same for all the industries. This is only all companies, it is same. Next slide. And the exemptions also same for all the companies. Next. Yeah, for steel cost accounting record rules, it is not only the steel. You see, the railways, in some companies, the forged wheels and the loco wheels are also manufactured. So the wheels and all are covered under railway industry. Other things, pig iron, blooms, billets, and flats, revars, plain wire rods, they are all under the steel category. And minerals, suppose coking coal we sold sometime, and crude coal tar, which is a byproduct, and heavy crude benzol, naphthalene, DNL, we have explained in the byproducts process. All these are saleable products, which covers under mineral fuels other than petroleum fuels. And inorganic and organic chemicals like benzene, toluene, they comes under the separate industry, and ammonia sulfate comes under separate fertilizer industry. And if you see Bloom's billets 7207-1190, 7207-1990, both are same products, but based on the chemistry, based on the carbon percentage, the SETA code is different. Likewise, wire rods also like that. Separate, same product, but different SETA codes based on the chemistry. Next. Yeah. See, what the main issue with the cost accounting record rules is the installed capacity. Last time after Sir's presentation, he opined that installed capacity for manufacturing sectors can be easily made. I am a little bit, I agree to some extent, but as far as steel industry is concerned, steel industry also has some problem in calculating the installed capacity. in integrated steel plants, up to hot metal stage is a single product. From hot metal iron stage to liquid steel, where grade of steel is decided by addition of ladle additions for ferroalloys, aluminum, everything will be added. So each grade is a product. Approximately 100 grades will be there for a size of 6 million tons. Then liquid steel is casted in casters for producing crude steel, like semi steel. For example, blooms of different sizes. We have discussed earlier: 320, 250, 250, 250, 200, 200, 150, 150. These are the sizes and the grades: IS 2830, IS 7887, A105, like that. So based on the grade, the product will be changing, and both will be under different setup codes. And semis blooms are reheated in furnaces, again furnaces of mills like billet mill, bar mill, wire rod mill, structural mill. And again, size wise, grade wise product will be there. Means 5 mm, 5.5 mm IS 7887, 6.5 mm 7887. Both are two different products. And the capacities are generally available at hot metal stage and liquid steel stage and bloom stage, billet stage, and bar mill stage, like that. Mill wise capacities are only envisaged. SETA wise capacities are not envisaged, because any SETA maybe less carbon material or more carbon material, mild steel or medium carbon, both can be produced in the same mill. So SETA wise capacities are not envisaged. So SETA covers more than one product from different. We have seen earlier rebars and billets in the two SETA codes, the same material is there. So based on the chemistry of steel, like carbon percentage in the steel. So it's not practicable to provide installed capacity SETA wise and capacity utilizations for that. So it is very difficult. Then in addition to the capacities, if they incorporate sector-wise, industry-specific important techno-economics. For example, in steel industry, fuel rate means how much coke is used, how much nut coke is used, how much PCI used per ton of hot metal. That is a important parameter anybody will check. All we compare with the peers how much they are using, how much we are using. So that type of techno-economic data, if it is available in this cost audit report annexers and all, then it would be a good input to the government, along with historical trends in order to assess companies' strengths and weaknesses, and they can compare with the other companies. So that is missing in the present cost audit reports. Then next slide, please. Then SETA-wise cost sheets. See, we have told, we have discussed just now. Product means suppose 5.5 mm wire rod IS 7887 is a product. So that way only we will see internally how much profit is there for that product, how much margin is there for that product. But in the SETA, so 5.55 mm of wire rod and something else, some 6.5, some 8 mm, it will be clubbed together and we have to show. So product-wise cost sheets are available in the ERP system or any other system, it will be available. And we have to keep that SETA code against that product. And the SETA is a combination of different products. And one CTA consists of different products from different mills. Even wire rod mill, even bar mill product and MMSM product, maybe product may be same in, as per SETA. Then product-wise data is to be sorted based on SETA code and to be reworked. And SETA-wise cost sheets have to be prepared. Again, the lot of exercise has to be done only for the purpose of cost audit. As steel sector involves series of processes, we have seen the process, how many processes are there, sequence from right from coke oven to mills. So many processes are involved. So series of processes are involved. CTA-wise data extraction is a challenging task and time consuming and duplication of job for the cost accountants working in the steel sector. These are all our observations. And when it comes, next slide please. Yeah, then conclusion. The maintenance of cost records and audit are absolutely necessary for efficient resource utilization, as well as monitoring and improving the efficiency of organizations. This is very much required. And it is the best interest of consumers, investors, and workers and industry. All stakeholders are benefited with the cost records. And cost audit is based on the economic principle that resources should flow from the remunerative channels. So there should not be any idle assets or wastage in the utilization of resources. Cost audit measures these parameters, indicating the effective efficiency in the utilization of financial and physical and human resources. Then cost audits brings out weaknesses in the internal workings. If those parameters are there, industry specific parameters are there, then inefficiencies can be immediately traced out comparing with the previous year's experience. So the benefit of top management then can be met. Then the cost audit provides more accurate data as regards the cost of various items and the quantity of materials consumed, thus helping the proper computation of variance and hence productivity. In a nutshell, cost audit covers efficiency, performance, and propriety. This is the theme of cost audit, and the report rules and record rules, they are all towards this efficiency, performance, and propriety. And we are believing in this. Now, the question and answers, if anything is there. Hello.
Yes, sir.
Any question and answers? Questions I answer, I'll give.
Any questions?
Yeah, I am having one question related to product costing.
Yeah.
So for indirect,
Sir, your good name, please.
my name is Ashok Dani. I am also working in the steel manufacturing plant at Gujarat, Mehsana.
Okay, good. Nice meeting, sir.
Yeah, thank you. It was a good presentation given by you, sir. We have learned a lot. Thank you.
Okay, thank you.
So
sir.
my question is related to product costing, like for indirect cost or the support function cost, like finance, purchase, quality department cost. How do you allocate the cost to individual product? Like it's based on the machine hours or labor hours, or what are the
No. That is based on the net sales realization. Indirect costs of finance and all, general overhead we say.
Okay. So that you are allocating based on the net sales ratio.
Net sales realization. If it is production overheads, it is based on the operating cost of the individual products.
Okay. Got it. Thank you.
Right.
Any other question?
Sir, good evening.
Yeah.
Myself, Ramshankar Mishra. I am working in Mangalore Refinery and Petrochemicals Limited. So I want to ask you one question. Here in steel, actually, you told when the BOM is you are preparing, then the actual cost is going on the standard. Means first the cost is going on standard. Then when the getting consumed, then the actual cost is there. So can you just elaborate how the price difference is getting accounted in the finished goods and in the WIP?
Yeah, we have raw materials at standard price. Hello.
Yes, sir. Please continue.
We have raw materials at standard price. Initially, when production order is counted, when consumptions are happening, production orders are debited with the standard cost. Okay. See, when
Okay.
when we receive raw material, what is the accounting entry is passed? Inventory debit at standard price, price difference debit to GRIR clearing account.
Okay.
Then during the against that material, during the material ledger, that price difference will be flown to consumption and stock. Then that price difference will be rolled up in the material ledger process. That is the beauty of the system. If material ledger is not there, that roll up is not possible.
Okay.
Have you implemented material ledger in your company?
Yes, sir. We have material ledger, but we are just now implementing. But my thing is that the price difference when it is getting consumed in standard, actually how this
no, price difference is not an standard. Base inventory price, some standard cost will be there. Suppose 100 rupees is the standard cost for an X raw material. You
Okay.
have procured at 120 rupees.
Okay.
Okay, initially that 100 rupees, when it is consumed against the production order, consumption debit 100 rupees happened. Then this 20 rupees, it is already booked in your material ledger. So that material, again, when you process the material ledger through CKML CP, period end में that when if that material is consumed, wherever it is consumed, this 20 rupees will be debited to that product where this material is consumed.
Okay. So ultimate consumption will be there for the product 120.
Yeah, that is the beauty of this material ledger concept in SAP. Because in steel, we have a joint plant committee. That price will be decided with all the plants. They will be the part of that committee, and they will decide after 2-3 months that price will be decided after receipt of material. So those price differences, how we will allocate based on this material ledger process only, it can be rolled up to the finished goods, and it will flow up to, suppose my material is produced in Visakhapatnam and transported to Nagpur or Mumbai. So the material, if it is transported to Nagpur, that also it will be taken care, and if it is transported to Mumbai, that also it will be taken care. This price roll up will be till that point, wherever that material is lying.
And sir, one more thing, suppose in your SAP, you told that you have implemented the product costing. So your cost, and subsequently as per index 2, when you go for the inventory valuation, cost or NRV, whichever. So if NRV is lower than cost, then what accounting entry you are passing in system?
Then accounting entry will be inventory. There will be, see, you cannot pass any manual entry to the inventory codes which are used in the SAP.
Okay.
Right. The automatic posting tick will be there in the GL. Right. To that GL you cannot post. So you have to create another manual GL for the inventory, and you have to compare that cost and NRV, whichever is less. That inventory, always it will be, inventory will be credited. Hello?
Yes, sir. Yes, sir. Continue, sir.
Inventory will be credited, and cost of goods manufactured or sold, it will be debited. That is the accretion to decretion stock.
Okay. So you mean to say that suppose one FG cost of production as per your SAP is 100 rupees, but ultimately your NRV is 90 rupees. So inventory will be credited and accretion of stock will get debited.
Yes, sir. Yes, sir. Exactly.
Okay, that way you are doing. So it is, sir. It is not through system. It is just a JV entry then.
A journal entry will be passed. It can be made in system also, but not through material ledger. One BAPI entry you can pass or something like that.
So whether your system
that comparison is we are making it in SAP only. Okay,
but suppose your system is computing 100 rupees, but your NRV is 90 rupees, so you bringing out your inventory. So when your PI sales will be done in the next quarter, So how system will react to that?
Again, I will reverse that entry in the next quarter beginning.
This JB what you have passed.
Yes. And
Okay.
my 100 rupees is there in the system. That only it will take it as I have to compute my cost of production with my historical cost only.
So sir,
So with 100 rupees only I have to compute next month.
Okay, just 1 minute. When you are putting any costing, ultimately your expenses are there respective GL. So you are putting one thing, your FI means FG account will be debited and COP will be credited. So
Yes,
you're
sir.
taking care of your expenditure and it is going to the FG.
Yes,
and
sir.
selling GI sales, then GI sales and this difference will be your profit only.
Yes. Yes.
So now this manual entry what you are pushing, again you are reversing in the next quarter, again actual entry system to system will deriving the profitability analysis.
Yes, sir. Yes.
Okay, okay. Sir, and what about your scrap valuation? How you are doing scrap valuation?
Scrap valuations, see, in SAP, you have a price determination. Price determinations like S2 and S3. S2 is the single level transaction based, S2 is transaction based, S3 is single level multi level, and another one is V. V is the moving average. Right. The scrap and all, as per the all steel companies, what they do, no? See, for pig iron is the base. Pig with the cost of pig iron, we will take, and 90% of pig iron cost will be assigned to scrap.
Okay.
Steel
So
scrap.
that's a inventory for you only.
Yeah. That is we are determining. We are fixing that rates. As per our accounting policy, we will fix the byproducts rates.
It is not system, it is a manual.
Yeah. And manual means in system only we will do through MR21.
Hello.
Hello, sir.
Hello, sir.
Sir, tell me, sir.
Actually, can I get a sample cost sheet for the steel plant?
No, without figures you can get, sir.
Huh?
Without numbers you will get, sir.
Achha. I have given my email ID in the chart.
Okay.
Please share a sample cost sheet so that it.
Sir, cost sheet is a confidential one, you know.
A cost sheet which is meant for the audit purpose.
No, even for audit purpose, one company cost sheet is confidential. It cannot be given to others. With due respect, I am telling.
Actually, you can delete the name or the just sample cause to get understand about this, how it is being.
No, sir, my
Name
conscience
will
is
not
not
be there,
permitting.
just for the content only.
Pardon?
For the content only, without heading the name of the actuary.
That is available on net, sir. So many costs,
how it is being derived cost and
without figures, how we will know, sir?
huh?
Without figures, it is difficult to know.
You cannot.
We cannot.
But can you share your PPT?
Sure, sir. It is there. It's done.
Okay. Please, thank you.
Thank you, sir. Any other queries?
Yes, sir.
No.
Actually, somebody interrupted in between, but I was continuing with the question.
Okay.
What you are telling that you are taking some valuation is not through SAP. So actually,
it is through SAP only. It is through SAP only. But we are doing every month. We are feeding that data. See, suppose my cost for scrap this month, it is on the first day of month. I will update those rates through MR21 transaction. The consumptions and receipts will happen with that rate for that month.
Okay, okay. ठीक है sir. Thank you.
Any other query, madam?
Any other questions?
No, it's okay.
So since
Thank
there
you,
is no
sir.
questions, then we will conclude the session, sir.
Okay. Thank you, Sunil
Thank you
sir.
very much, sir, for the wonderful session. And also thanks to all the participants for attending the webinar. Thank you.
Thank you.
Good
Thank you
night.
very much for the opportunity given to me.
Thank you, sir.
I will request admin to share the PPT.
Yes, sir.
Okay.
Sure, sir. We will upload it on WLC website, sir.
Okay. Okay. Thank you.
Okay. Thank you, sir.
Thank you. Thank you. Bye bye.
Bye. Thank you.